Wall Street has got to know the highly anticipated inflation report. The question is still open. The burning issue is whether the data is enough to soften the cautious stance of Fed policymakers. On the one hand, inflationary pressure is easing. On the other hand, the process is not as steady as the Fed wants. So, investors are revising their forecast of the Fed's policy moves at the next meeting. The New York pre-market mirrored confusion among investors. As usual, let's sum up the results of the previous session. Despite mixed sentiment during this session, the benchmark stock indexes closed yesterday with modest gains. The S&P 500 grew by 0.43% to close at 4,376 points. The major stock indexes opened the New York pre-market on an optimistic note. Futures on the stock indexes went up in the pre-market, and the S&P 500 got stuck sideways, slightly above the key level for sellers at 4,447 points, but below 4,382 at the key level to continue buying. The PPI report showed on a Wednesday that factory inflation in the US accelerated faster than expected in September. On the back of rising energy prices, the core PPI extended its decline. The long-awaited minutes of the last Fed's policy meeting revealed that policymakers became more cautious due to the mounting uncertainty about the US economy, a series of volatile economic data, and aggressive monetary tightening. All these factors jeopardize the US economic growth. Participants pointed out that they would need to see more data indicating that inflation pressures are easing, minutes from September meeting reads. At the same time, the minutes do not reflect the most current picture, which, together with the statements of Fed speakers this week, gives many stock investors a reason for optimism. The biggest gainers were the interest rate-sensitive sectors of the stock market, real estate, which jumped by 2%, and utilities, which rose by 1.6%. Treasury yields went down in parallel. Futures on Wall Street's major stock indexes rose on Thursday as the Treasury yields fell, but both stocks and Treasuries later turned around. The U.S. Labor Department reported that consumer prices in the U.S. increased in September amid rising prices for home rent and gasoline. However, core inflation supports expectations that the Federal Reserve would not raise interest rates next month. The CPI grew by 0.4% last month, following a jump of 0.6% in August. Despite some signs of a waning inflationary pressure, the index is 0.1% higher than the expected 0.3% growth. The main culprit of accelerating consumer inflation is rising gasoline prices. The annual rate of consumer inflation remained flat at 3.7% in September, defying the consensus of a downtick to 3.6%. Moderating inflation of energy prices offset a slowdown in inflation in the other categories. Inflation is still way above the Fed's target rate of 2% since the central bank began the cycle of rate hikes 18 months ago. Currently, most market participants believe that the US Fed will put interest rates on hold, and high domestic demand in tandem with a tense labor market suggests the conclusion that borrowing costs could remain high for a longer time. In a separate report, initial unemployment claims were recorded at the same level of 209,000 last week, fewer than the forecast of 210,000. The fact of the data released today is enough so that yields of the benchmark 10-year treasuries halted a two-day fall. In response, the companies with a joint market capitalization such as Apple, Alphabet, Tesla, Nvidia, Meta and Amazon shed 0.1 and 0.7% before the opening bell. The stock market withstood the series of red-hot data. At the same time, the currency market again boosted the US dollar's luster. Having grown by 0.35%, the US dollar index traded at 106.20 before the opening bell. The index is expected to trade in the intraday corridor between 105.70 and 106.30. Today, the greenback was hovering at around a two-week low ahead of the inflation data. The US dollar owes its strength to stubborn inflation, which has been cooling down slower than anticipated. Like treasuries, the US dollar resumed its upward dynamic. However, the current fundamentals are not enough for the US dollar to break the highest levels of September. The greenback's growth is likely to be muted because the pause in the Fed's rate hikes is realistic. And the Canadian dollar is not as gloomy as most major currencies. The loonie found support from growing oil prices. The USD CAD pair was trading at 1.3633 in the New York pre-market, 0.3% up. And the intraday corridor for the instrument is seen between 1.3620 and 1.3650. Oil prices rallied by more than 1% on Thursday, having reversed after a recent fall. The International Energy Agency downgraded its forecast of oil demand for 2024. The agency suggested that more severe global economic conditions and the progress in energy efficiency would take their toll on demand. However, the Energy Agency upgraded the forecast for 2023 to 2.3 million barrels per day from 2.2 million barrels in the previous outlook, and this revision supported oil prices intraday. Today, the crypto market is displaying the opposite correlation with the US dollar index. Most crypto assets are hit by sell-offs. Bitcoin is on the verge of a failure. The token is unwilling to fall to 26,700, hovering slightly above. If the flagship crypto cannot settle in the area between 26,650 and 26,800, it's running the risk of testing 26,200. Alternatively, the price might recover to 27,000, which could hardly happen. Bitcoin was the only token in the crypto with a positive dynamic in the bear market. The crypto was propped up by the updated application from ARK Invest and 21 shares to create a spot Bitcoin ETF. The firms updated the voting in the applications following the guidelines from the Securities and Exchange Commission. The amended statement contains additional information about how the assets of the proposed spot Bitcoin ETF will be stored and how their value will be determined. It also clarifies that ETF assets held in a Coinbase custody are stored in separate accounts and are not commingled with their corporate or other clients' assets. Keep close tabs on the global financial markets on the InstaForex TV channel. We are open for all your questions and suggestions. Make profits with the InstaForex and see you online tomorrow.